Good afternoon, dear students. Myself Paratama, Assistant Professor, Department of Commerce, GFGC Gauribinur. Welcome for the session 25. In this session, we are going to discuss about the concept of flow of fund and simple examples thereon. In the previous class, we discussed about the uses and limitation of fund flow statement. The objective of this session is to familiarize the student with the fund flow statement as a tool for analysis of the financial performance of a business. After the completion of this session, you are able to identify the transaction result in inflow or outflow of fund or sources and application of fund. The term fund means working capital. The excess of current assets over current liability is known as working capital. The term flow means movement or change. This includes inflow and outflow. Thus, flow of fund means change in working capital. It takes place when any transaction may changes in the amount of fund. If the effect of any transaction results in increase of fund is known as sources of fund. If any transaction results in decrease of fund is known as application of fund. In order to judge as to whether the particular transaction has resulted in the change in net working capital or not, the accounts involved should be classified into current and non-current. If all the accounts involved in the transactions belongs to the current accounts, then there is no flow of fund. Similarly, if all the accounts involved in the transaction belongs to non-current category, then also there is no flow of fund. It means a transaction which results in the flow of fund only when one of the account belongs to current category and another to non-current category. Let us see some of the examples for current account and non-current accounts. The current accounts can be either current assets or current liabilities. See the meaning of current assets. Current assets are those which can be easily converted into cash within one accounting period. Current liabilities are those which are intended to be paid in the ordinary course of business within one accounting period out of current assets. For the purpose of above description, here some of the examples for current accounts. Current liabilities, bills payable, sundry creditors, outstanding expenses, dividend payable, bank overdraft, short-term loans and advances, proposed dividend, provision for taxation. These are some of the examples for current liabilities. Cash in hand, cash at bank, bills receivables, sundry debtors, short-term loan and advances, prepaid expenses, accrued incomes, stock are some of the examples for current assets. Following are some of the examples for non-current accounts. Equity share capital, preference share capital, debentures, long-term loan, appropriation of profits, capital reserve, provision for depreciation, capital redemption reserve are some of the examples for non-current liabilities. Goodwill, land and building, plant and machinery, Furniture and fittings, trademark, patent, discount on issue of shares, preliminary expenses are some of the examples for non-current assets. If any transaction, both the accounts involved in that belongs to the current category, does not result in inflow of fund. In other words, these transactions have no effect on net working capital. Similarly, in any transaction, both the accounts which involved in that or belongs to the non-account category does not affecting to the flow of fund. Means no effect on working capital. Following are some of the examples to show the transactions of fund flow statement. Issue of shares. In this, one account is current, another one is non-current. It results in flow of fund. Issue of debenture. One is current account and another one is non-current account. Here is also inflow of fund. Rising of long-term loan, current account and non-current account. Here is the result of inflow of fund. Sale of fixed assets. This is also a transaction between current account and the non-current account, results in flow of cash. Redemption of preference share. One is current account and another one is non-current account and considered as outflow of cash. Redemption of debenture, non-current account and the current account, outflow of cash. Purchase of fixed assets. One is non-current account and another one is current account. Here is a result of outflow of cash from the business. Repayment of long-term loan, non-current account and current account. Here is also the result of outflow of cash from the business concern. Purchase of long-term investment. This is also the transaction between non-current account and the current account. It results outflow of fund from the business. Payment of bonus in cash. This is the transaction between non-current account and the current account, results outflow of cash.